Welcome back to another video. This is the PharMore Money Channel, and today we're going to be diving into General Electric, GE, and why I believe it's going to run up in this year, 2021, and beyond. Tons of positives ahead, guys. Stay tuned. We're going to dive right into it. So, PharMore Money team, GE took a beating in 2020, right? The stock surged in 2019. It led to a nice, strong start in 2020. January, February, the stock looked great. And then COVID hit, right? And GE's aviation and power unit losses just exacerbated. The earnings the entire year were abysmal, but I have a ton of faith that this trend will change, and it's a stock that we can definitely get behind when it's just wavering around $11. And just a few years ago, guys, this was a $40 to $60 stock. So tons of upside in that sense. And GE is a company that I don't foresee going anywhere. I think they've got a great balance sheet. We're going to talk a little bit more about its free cash flow that it's holding as well. So let's keep going. So, PharMore Money family, GE has four segments that it basically that it's comprised of, right? So the first one's aviation. Obviously, engine aftermarket sales in 2021 are going to be down just because of the collapse in commercial flights. Engine orders are collapsing due to weak aircraft orders. But GE's outlook for 2022 basically is that the COVID-19 vaccine will act as a catalyst for recovery in commercial flights, and the market will start pricing in long-term recovery. I do expect a lot of analysts to become bullish again on GE. It's only a matter of time. In terms of healthcare, in 2021, they do expect equipment orders to be weak, with medical budgets prioritizing COVID-19 and all elective surgeries being delayed. But in 2022, healthcare orders should improve, and the segment will continue to generate close to $1.2 billion or more in free cash flow. The power and renewable energy segment is going to be the one that's going to be key for the survivability, right, of GE as we move forward. And in this upcoming administration, clean energy and power and, just healthcare is going to be such a pivotal point that I do think that this stock is only primed to run up again. In terms of power, right, gas turbine orders will recover from 2020. Gas power fixed costs will be cut to $2.5 billion, and power services and power segment margin could be on an uptrend, basically, more so because of the positive free cash flow, right, going forward. Margins on renewable energy will basically break even or be positive and remain on an uptrend in 2022. So in 2021, I do expect both power and renewable energy to make a little bit of a comeback, but I do think that by 2022, GE is going to have the power and renewable energy sector out of the four completely figured out and just running ahead in terms of free cash flow exceeding $1 billion to $2 billion, and margins coming back to where they used to be. So tons of upside, guys. Stay with GE. I think there's a ton of promise, and I think it's a great buy right now when it's teeter-tottering around $11. So guys, GE's vision is to grow margins and EBITDA as it heads into 2022. Their outlook is already basically 2 years ahead. So this is why this company is something that we should all sit back and watch and possibly even invest in. I know I'm invested in it, but I think it's a steal when it's only trading at $11 currently. Wall Street analysts expect a cash outflow of close to $1.3 billion to turn to free cash flow of $2.8 billion by the close of 2021. In 2022, this is the key, guys. Analysts expect free cash flow to hit $4.5 billion. That's absolutely mind-numbing and insane. GE by 2022 will be a company with a forward price to free cash flow multiple of 22.2. So basically, if it doesn't run up, something is wrong with the stock price. So basically, it's just calling out the fact that it is going to run up, guys, and it is going to have a nice bullish run here towards the middle of this year into 2022, basically. So stay with GE. So, PharMore Money family, in regards to GE Aviation, right? Obviously, it's so hard to predict what COVID-19's effects are really going to have, right? And especially with the variant now out there. But I do honestly think with the vaccine rollout starting to kick up here over the last couple weeks into, this upcoming month and months ahead, right? I do believe air travel is only going to increase. The past 3 months in terms of in terms of air travel, we've seen a nice trend in the US, China, and the world. You can see that on the graph here on the right. Year over year, commercial flight growth is moving in a positive direction since the lows in March, April, and May of 2020. GE will continue to receive orders from the government as well as commercial engine orders as well. GE runs a lucrative aftermarket business for engine repair and maintenance. They make the engines for the Boeing 737 MAX jet, and I honestly do think this is only it's hit its rock bottom, and it's only a matter of time when it just starts kicking and running all the way up the trend line into the bullish territory of where it's supposed to be in the high 20s, high 30s, and even beyond. Guys, GE's energy and power segment turned positive in terms of margin in the third quarter of 2020, which is absolutely incredible thinking what this company has already been through in 2020, and it just took a shellacking, right? All the Wall Street analysts, I mean, just in the sell-off that continued for the majority of the year, just based on air travel restrictions and, access, right, to air travel. But I think this is just such an important piece that people are missing out there, is the fact that it did run positive margins in power and renewable energy in the third quarter, as you can see on the graph on the right there. Back in March, management had forecast that the renewable energy segment's profit margin would be break even in 2021. But I do think this will only go more positive as we continue through this year into 2022, and we have that extra access to that free cash flow as well. Management estimates that it will only have $1.5 billion in backlog from low margin pre-2016 deals at the end of 2020 compared to $5 billion at the start of 2020. So I think that just goes to show you that, it was in such a hole from the fact that, from the power and energy sector, that it's basically dug itself out of, close to $3.5 billion worth of bad debt, basically, in that sense. So I think there's a ton of upside, guys, tons of promise. It's being traded at $11 right now, and I think it's a massive steal, especially in the fact that it does pay a dividend as well. So definitely keep an eye out. I know I've got a position in GE. I plan on holding on for the long term. I do think there's a ton of promise. I have a ton of conviction behind it, and I think it's going to continue to run in the right direction here to close out 2021 and to start 2022 more so, especially. If you've enjoyed this video, if you did, please go ahead and hit the like button, and please do subscribe. Turn on your notifications, as videos are going to continue to pour in as we move forward through 2021. This is going to be the road and journey to wealth and to just massive portfolio returns as we move forward. Thanks, everyone.